video we discussed about option trading. Today we are going to discuss what is meant by SIP. SIP, there has been a systematic investment plan. SIP, there has been a systematic investment plan. Previously we discussed about delivery trading. Delivery trading, I suggested you split up our investment. Split up your investment means you just select some standard companies in different sector. That particular companies itself, you just split up your investment that I suggested in our previous videos. Here also the same way the traders they may trade and how it is working. Suppose you are investing around 1 lakh rupees in a market itself. In share market you are investing in 1 lakh rupees. Your money, you are a responsible person, and daily you are watching market, and depending upon the market movement you are investing and you are trading, and end of the day you are getting a profit. So it is in a normal trading. So here how it is working, that in your payment monthly, the SIP monthly you are investing some amount. Monthly investment means that in some, most probably this one helpful for salaried employees. So salaried are in a businessman also, most probably this one who they may invest in SIP itself, most probably in salaried peoples. So how they are investing in a monthly, how much amount they can pay. Monthly 5,000 means monthly 5,000 they may pay. So once they are paying a monthly 5,000 rupees, these investments, that particular company where they have a SIP account, that means where they invested in mutual fund, the particular mutual fund companies, they are taking the responsibility and they are doing the trading. So how much amount you are a salary employee, you have you invested in mutual fund means who they take responsibility, the particular mutual fund company they take responsibility, and behalf of you they are trading. So here your total investment, they are 100%, they never invest in mutual fund itself. How much you are investing, that in the investment around 70% amount they may invest in share market itself. Some less percentage of the amount they invest in other field. Other field means in a government bond or gold or in some other real estate sectors. So some of the other investments they may split up your investment, some less percentage they may invest, and mostly around 70 to 75% of that amount they invest in share market itself. So what is the difference? Your money you are trading, that is one kind of trading, and your money others they trade. What is the difference here? Your money, if you trade in you are invested means in the morning 9 o'clock to 3:30 continuously you know to watch market. Sometimes if you have in some busy schedule, at the time your investment it will be come down or it will be grow up. So depending upon the market movement, sometimes it will be affected. Here in a mutual fund itself, what they are doing, the mutual fund companies, they are they are trading behalf of you. So here each and every companies they have some research team. Each and every companies they have some research team, and daily they may trade. So like you, it is there in more investors now. So not only in you, so more investors. So all investments, all money together they trade. So then they have some research team, and they have some guideline. They continuously watch news. They continuously monitor that global market movement and finance related whatever the things it is happening, and finance related movements and currency market and other market, whatever the market, most probably they research about finance related all sector. Suppose you just compare only one person, you cannot watch all market. All market means if you are in a investor in Indian market, you should watch global market also, because in our Indian economic conditions presently it's good. If you feel presently our Indian economic condition good means, suppose any one of the world market, in a US market, suppose today financially any problem means, once US market crack down, the next day the particular thing it will be appear in Indian market also. So presently there in all country market that is be get linked, because in a universal trading, universal businesses, that's why. So your investment, if you are investing in, you are investor, you should watch in all market, global market. So in our Indian market 9 o'clock to 3:30, and 1 o'clock or 1:30 onwards in a European market. After in the 7 o'clock, 7:30 onwards in the New Year's market. So continuously you need to watch different markets. So that's been a difficult thing. And when you are trading, you need to watch continuously in different news. Okay, so one side you are trading, one side you need to watch news channels you need to watch. So that is one kind of the difficulty. And other thing that in a finance ministry statements and other in a global economic conditions, different conditions in the economic condition situations, and crude oil price and currency market situation. So all kind of the money related, all kind of the economic things, only one person they continuously they watch and continuously they do research. That's to be a difficult thing. Here what they are doing, that in a like you more investors of money together, they invest in a different market, share market some percentage, and they're in a government bond and gold, some other whatever the things they can able to invest in a different places. They invest in a different percentage. Most probably they may invest in a maximum amount in share market, but here in a biggest company, so what they can do, some team they may do in a research, they may do some of them, they may watch in a news, they may watch some of them, they may research about in a global economic condition, they may research. So they have a manpower to do these things. So there is a difference. Only one person, so they are doing in a trading, they are watching in all such kind of the things. That's to be difficult. At the same time, mutual fund companies, they have in a more number of the employees, so they have in a research team and they have in a qualified employees. For them, they may do that this kind of the research analysis they may do. So once they are investing in your money, they are getting some profit, so they have some charges in a share market, how it is work. If you are doing in a trading, end of the day you need to pay some brokerage and government tax you need to pay. The same way in a mutual fund companies also they have some charges. So apart from the charges, there in a how much amount you are investing, end of the day how much amount you are getting a profit. So the money you are investment in a 5 years or 10 years means in a 10 years the maturity, after the maturity period you can able to get a money. Most probably in a SIP, in a long time investment, it will give profit. In a previously in a delivery also I said. So if you are investing in a delivery basis, in the long time investment, most probably you can able to get a profit. So maximum you can able to get a profit. Maybe you are investing in a 7 years or 8 years means you can able to get a money in a double you can able to get. For here how it will be in a mutual fund investment, how it will be work. If you are investing most probably in a 5 years or 10 years time, so if 5 years or 10 years time you are investing, the 10 years later you can able to get a amount in a double you can able to get, or depending upon the company, depending how they are doing their work, depending upon that. So most probably if you want to select that in a mutual fund company, the standard mutual fund companies you can select. Whatever the companies you feel that is in a standard, and you just check that particular companies in a last few years performance. That's to be more important. Last 2 years or 3 years or 4 years, how they given return to their investors. And the third thing, just most probably in the investment related sectors, you just check their charges. That's to be major thing. So in the broking firm or in a mutual fund companies, just to check their charges, how much percentage they are charging. These things you need to closely monitor. And here mutual fund, what is the major benefit? So once you are investing in a monthly basis, you don't want to worry about that market. Normally you are a trader or you are an investor in a market, in a stock market means continuously you need to watch. That's to be a little bit difficult thing. Otherwise, sometimes in the headache, suppose you are getting some more loss, that it will be the loss, it will be affect your daily day-to-day work. You are an investor, you have invested in some few lakhs rupees, means today you have in a 50,000 or 1 lakh rupees loss, means the particular loss, the particular thing, it will affect your day-to-day work, because mentally it will be affect. At the same time, here you don't have any headache. The mutual fund companies, they take care your investments. So there is one of that profit. Anyway, long time if you are looking that mutual fund also, it will be give in a good return. That's in a monthly basis you can invest, not only not in the same time you don't want to invest in a large amount. Monthly basis you can invest some amount. So this is in a, we are saying as a SIP, systematic investment plan. This is good for most probably in a salaried employees. This is a good plan. These things I plan to explain with you in this video. In upcoming videos we discuss about other things. Thank you for watching, and if you think this information is helping to you, just subscribe this channel. Thank you.